Welcome back, everyone. This is Thomas Triple T Time with another new bullish crypto analysis. Before we dig in and take a look at the Bitcoin, crypto, and equities markets around the world, remember this is for edutainment only and not to be considered as financial advice. Additionally, when you find value at any time during this video, feel free to smash the like, ring my bell, hit subscribe, and share your thoughts in the comment section. Let's get through the news first, and then we'll dive into the charts. First of all, Elon Musk he talked about creating his own social media company, but I think he changed his mind. Instead, he bought 9.2% stake in Twitter, making him the largest shareholder. I guess that's one way to get your own social media company. And I think Twitter bounced up about 22% on the market opening. So I'm sure he'll leverage his large shareholder stake and influence the direction of Twitter. The bond market bets the Fed will overdo it. This is according to Axios. And I somewhat agree with them and somewhat disagree with them. As we know, the Fed, they're trying to create a soft landing for the market. But the recent 5 and 30-year bond yield had an inversion, and also the 2 and the 10-year had an inversion on Friday. And so that create some alarm bells for a potential recession. And so with the yields inverting, some experts predict is that the Fed, they're going to be very hawkish and increase rates. 0.5 is already priced in, but it could be more is what they're saying. And when you increase rates too fast, it could have a negative impact. So this article basically said, when does a report of a booming job market, the job market report on Friday was very positive. And but then again, job market booming, and you have alarm bells causing recession. How does that work? Basically, they're saying that the exceptional job market growth leads bond investors to bet that the Federal Reserve will raise rates so aggressively to squash inflation that it will force the reverse course later. They will be forced to reverse course later. That's a possibility. I think so far it seems that the Fed is moving gently. They're giving themselves room to maneuver, but we'll see what happens. By the way, this news segment is going to be lengthy because there's a lot to cover from a macro perspective. According to Fortune, the economic shock hitting the housing market just got bigger. As you know, mortgage rates, 30-year mortgage rates climbed to 4.67, and that's pretty high. That should slow down the hot demand in the housing market. At the same time, though, it could impact home buyers, obviously. The higher rates, that means that buyers would have to prove their debt-to-income ratio is going to be low enough for them to afford it, because banks will scrutinize borrowers even more. And so there's talk about a potential real estate market crash. I'm not sure if that's going to happen. We're due for one, but I'm not sure if it's going to happen anytime soon. But something to keep in mind when you see these key numbers start to move dramatically. Citibank sees metaverse economy as large as $13 trillion by 2030. I'm very bullish on the metaverse because it creates borderless worlds where, for example, let's say you can set up shop like you do with Amazon vendors or something like that, Shopify, and you can do that in a totally decentralized way. like embassies or like the ability for creating, promoting brands is humongous. I'm not sure $13 trillion by 2030, but definitely the potential is huge in the metaverse, and we're already seeing it. And if you're paying attention to recent cryptos that are skyrocketing, a lot of them have some kind of connections to NFTs or metaverse. Jamie Dimon says confluence of inflation, Ukraine war may dramatically increase the risk ahead. I totally agree. He said that it's not a surprise, but with COVID pandemic, high inflation, and you get the Russian invasion of Ukraine, are resulting in a lot of macro factors that are interconnected, and we may not see the full impact until months later. So hedge carefully. In other words, prepare to buy the dips. In the same note, J.P. Morgan said that, Diamond warns a possible $1 billion Russian loss because of their exposure in Russia. Yeah, that's very likely. That's not a country you want to, be exposed to. The economy is collapsing. Russia faces deep recession that will only get deeper, according to CNN Business News. I think they're predicting, a 10% contraction at GDP level in the near term. Here's here's the caption from the article. It says sanctions level against Russia have pushed the country toward becoming a closed economy. Well, they kind of chose that path. Unfortunate for Russians, but their governments suck. The status of the country is ill-equipped to handle economic consequences of Russia is facing are severe. High inflation that will only get higher, and deep recession that will only get deeper. Yeah, I think they're barely feeling it right now. And if you're looking at the news reports and people at grocery stores, scrambling to get items like sugar. I don't know why people would buy sugar, but it's not good for your health. But, everyone's different. Russia's situation, want to keep an eye on that. Russia's studying, this is a funny article. Russia's studying how to lure highly skilled workers back from abroad, according to Reuters. How about stop being a dick? Stop being a dictator dick. Like, stop invading your neighbors. Stop killing civilians. Stop bombarding maternity wards. Just stop. How about that? Just take a look at where these brain drain people are going to. They're more likely going to, countries that value freedom, countries that value freedom of speech, countries that don't poison people. Stop doing the study. Just do. Russia, just be kind, be cool. It's both. Okay. U.S. will work with allies to transfer Soviet-made tanks to Ukraine. About 2/3 of the forces have pulled back from Kyiv, Russia. They're heading east towards Donbas. I think that's how you pronounce it. Just give Ukraine what they need. They're doing a fantastic job without, UN helping them as far as boots on the ground. But fantastic job to the Ukraine people and their military and their leader. EU's new Russia sanction likely to include steel, luxury goods, jet fuel, and more. But they're holding back on having an oil or natural gas embargo because they are so dependent on it, like a drug addict, a drug dealer. Hey, Europe, how about that renewable energy to free yourself? Okay. Britain announces plan to mint its own NFT as it looks to lead the way in crypto. That's cool. How about you take a look at ways you can help, like, get rid of some of the ridiculous laws that are being in place about privacy and stuff. It's great that you want to sell NFTs, but just focus on promoting freedom and promoting separation of money and state, and return power back to the people. And then you can work on an NFT. But hey, that's good direction. Baby steps. UK government moves forward with regulatory framework on stablecoins for payments, according to Cointelegraph. They're looking for ways to help create framework, if you will, basically regulate the stablecoins market. The United Kingdom's Economic and Finance Ministry has said it intends to amend its existing regulatory framework to incorporate stablecoin use as a means of payment. I think payment is fantastic, cool, but if your regulations hinder the use of stablecoin, or creates friction for consumers to trade using stablecoins, then that's a different story. I think it's something to keep an eye on. Crypto volume in India dropped by 15 to 55% after new ridiculous BS tax law. India is one of the India, Vietnam, some of these emerging markets are some of the top crypto trader locales. So for them to drop that much, it's concerning. So something to keep an eye on. Their tax law is ridiculous. That's one way to stop innovation, India. You have some of the brightest minds in the world. Leverage them. Stop inflicting pain on them. Okay. SEC rejects ARK's Bitcoin spot ETF application. No surprise. Every week they reject something. They reject some kind of spot ETF. SEC, you need to get over yourself and approve the spot ETFs, the spot Bitcoin ETFs, because it's ridiculous that you approved the Bitcoin's future ETF, but you continue to reject these spot ETF applications. And another way to help the SEC is talk to your politicians, your senators, your Congress people. Talk to your representatives. Encourage them to help move in the proper direction here. U.S. lawmakers introduce a bill targeted at stablecoins. What a coincidence. U.S. lawmakers introduce a bill to target it at stablecoins, and the UK at the same time. I wonder what industry is helping influence this, Banking industry? According to the release by Senator Hagerty's office, the newly introduced bill would require stablecoins to be backed by government securities with maturity less than 12 months or U.S. dollars. Okay. Not so sure about government securities, but U.S. dollars, a deflation, an asset that's losing value constantly. I get where they're coming from. I get it. But I think there might be a better balance here, just my thoughts. But wait, what's the U.S. dollar backed by? Oh, wait, nothing. The word of the U.S. government. U.S. dollars backed by nothing. So let me get this straight. We should back up U.S. stable coins with something that's backed by nothing. So why don't we just start with backing it with nothing? Or math, like Bitcoin. I take that. Okay. Last but not least, Shanghai to extend lockdown of 20 million people as it reviews COVID test results. Why is this important? Well, Shanghai is a major financial capital in the world. It's also a major import-export area. A lot of one of the largest shipping route go through Shanghai. So very important if they're not able to open. Like for example, Tesla's Gigafactory in Shanghai has been closed, and that's going to impact them and the EV market. So that pretty much wraps up for the news and my special takes on the news. So let's dive into the charts. I'm so sorry if you guys had to endure all that stuff, but those are all important macro factors. So let's take a look at the crypto market today. Mostly blood red. Bitcoin 45.8, and notice dominance dropped again down to 40.86. Ethereum is down to 3.5. That's just down slightly, 0.37. Dominance is still in the upper 19s, 19.62. So that's pretty good for dominance there. A lot of other reds, but a few outstanding greens are Luna. That's they just keep continuing breaking all-time highs. Great job, Luna. ADA is back over $1.18. It's at $1.19 now. This one is DAI is a stable coin. Anyway, so yeah, blood red. There's some spots of green, so it's not too bad. It's actually pretty bad. On the bullish news about Twitter and the Elon effect, we got a technology sector dominantly green, with Apple up 2.22, Microsoft 1.66. Technology sector is booming here. Nvidia 2.57. Yeah, looking good here. Communication services also up here. We got Google, Facebook, Netflix. So looking good. Consumer cyclical, just part of it. In the internet retail area, Amazon up 2.81. Baba up 6.41. And JD, etc. They're all up here. But and then also in the auto manufacturers, Tesla, and a couple other small ones here. But if you look over here, it's very muted in the home improvement, restaurants, etc. They're very muted here. Just on tech related consumer cyclicals are green. The rest are either muted red or muted green, mostly muted red. So what's in common with all these? Tech, high growth. That's what's booming today. Let's dive into the watch list. SPX, NDQ, and the Dow Jones Index. All three are up. We got the VIX down below 20 at 18.57. Volatility is very low now. Negative 5.4% down. The Dixie 98.98, and that's up 0.43. US 10-year yield is at 0.46 up there. It's at 2.39. I can't see with it. Okay, 2.39, and that's up slightly, 0.46. All Apple, Tesla, Netflix, as you can see, tech stocks very high up here. U.S. oil just above 100 at 103.75, up 4.42. Gold is also up 1932, up 0.44. Silver is down. Kind of mixed here, you know. When gold is up, it hints at potentially risk off, but you got the tech and growth sectors coming in hot too. So a little mix there. As far as the U.S. dollar, euro is weaker than the dollar. We got the pound stronger than the dollar, and the dollar stronger than the yen. Mixed bag there. Let's go over to the charts. U.S. equities. Let's take a look at the trends. Opening day, all three indexes, Nasdaq, SPX, and the Dow Jones Industrial Average, all open and continue to rise slightly in the day. And on their average, it's like 7-day trend is still like a slight uptrend, but kind of sideways if you look at a shorter time frame. Same across all three. The Dixie, it's if you look at a 7-day trend, mostly sideways, but in the last 24 hours, it's seen an uptrend. What about the positive and negative correlation with Bitcoin? Let's take a look. Bitcoin, when the market opened, Bitcoin dropped as the Nasdaq increased. So positive correlation did not hold there, but Bitcoin returned to the upside, had some recovery. So did not hold at market open, but it held true since Bitcoin started going back up again. How about the negative correlation between Bitcoin and Dixie? Dixie has been trending up in the last 24 hours roughly. Bitcoin's been trending down, so somewhat holding. Here you 10-year yield, mostly sideways. You look at a 7-day trend, but on the shorter time frame, it's slight trend down here. Over in the European markets, mostly sideways for the UK 100 index. For the DAX in Germany, CAC in France, moving very similarly, up in the last trading period, but somewhat sideways overall. But if you look at a 3-4 day trend, it's slightly down. The stock 600 recovery in the current session, more towards the high point in the recent 7-day period. So kind of, I see a slight recovery overall here. Let's go to Asia and Australia. Australia, we see they opened up higher than their previous close, and they went choppy sideways. Nikkei 225, somewhat slightly down on a 7-day trend, but choppy on their current trend. KOSPI, somewhat of a recovery in the current session, but overall slightly up on the 7-day. And then you see the HSI, Hong Kong Hang Seng, slightly up, and they're towards the high end of their recent 7-day high. The Shanghai Shenzhen CSI 300, slightly up in their last several days here, 4 or 5 days here. But I think their current market is currently closed right now, or it seems it's not reporting. So overall, what does this say? There's a lot of mixed messages, but there's some recovery in the current session. So that's slightly good, but I think it's still very mixed. There's a lot of mixed signals in here. It's what I'm seeing, and that's my conclusion. We'll see what the rest of the week holds, but Bitcoin is continuing to chop sideways, as you can see here, roughly right around 46,000. Like I mentioned in several of my Bitcoin analysis. So appreciate your time. Feel free to smash the like, ring my bell, hit subscribe, and let me know your thoughts in the comment section. I have 2 more videos today, and I'll see you in those. And they are, Monday would be Manic Monday, and also the daily Bitcoin. So peace. See ya.